Are you prepared for what might be coming in less than 3 weeks' time? We face a worrying, but not surprising situation. Chancellor Rachel Reeves has warned that the ever-deepening economic problems, which they've gotten us into, means she's going to be making tough choices on tax. So what are these choices? How might they affect you? And what can you do to protect yourself? One thing we all need to be prepared for, however, there will be tax rises in the November budget. Welcome to the Bullion Advantage, the podcast giving you weekly insights into key global events and markets, whilst helping you protect and grow your wealth with physical gold. Let's get a specialist opinion on this, shall we? Today I'm joined by one of the Direct Bullion senior gold specialists, James Byrne. James, thanks for getting back on the podcast with me.
Hi, Jake. Yeah, nice to be back, mate. Yeah, busy couple of weeks.
Yes.
In gold, so yeah, good to get the time to come back and say hello.
Yeah, thank you so much. Let's get into it, shall we?
Yeah, let's go.
So, speaking it down the street on Monday, Rachel Reeves described her commitment to the government's fiscal rules as ironclad, but she refused to rule out any tax rises, saying each of us must do our bit. When she says each of us must do our bit, what do you think she's really saying?
Well, I think it's a polite way of saying we're about to pay more. Normally, when politicians talk about doing our bit, it usually means higher taxes or reduced services. The government's spent heavily, and they're looking to ordinary people and businesses to foot the bill. It's framed as like shared responsibility, but I think in reality it's a sign that the burden's shifting onto taxpayers rather than the government, tightening its own belt.
What economic pressures do you think are driving the government towards these tough choices, as they put it?
Well, I think we're definitely seeing that the fallout of years of overspending, inflationary policies and rising debt, interest payments and government borrowing are soaring. There's growth stagnating, limited room to manoeuvre. So I think instead of focusing on stimulating productivity, encouraging enterprise, that the government's now resorting in tax hikes to plug these holes, which is, choking off the growth that we need to sort of get the economy going.
I've got to ask, do you think any of this is ideological, or do you think it is simply a fiscal necessity?
Well, I think it's both. I saw that the government borrowed 110 billion.
Yep.
So it's definitely a fiscal necessity because the books just don't balance. But there's also an ideology at play. This government leans towards big state solutions, believing more taxation and redistribution can solve structural problems. A centre-right perspective would, argue for the opposite, empowering businesses, encouraging savings and rewarding investment.
Yeah, and one way of looking at it ideologically, this stuff was in their manifesto. Their popularity is already way down, and this surely can't help. So what does Labour's future look like, do you think?
Trust is everything in politics.
Exactly.
So once it's gone, it's hard to rebuild. I think, as you said, at the minute, there's a lot of unhappy people. People are fed up. It's hard enough as it is at the moment.
Yeah,
and when rise taxes, people get angry, especially, you just turn the news on now. Everything in the world is scary. People are scared to go out and walk around at night time,
especially if you've got a nice watch on.
Yeah, nice watch. you see it in London. We work in London, and you hear the stories, and it's not nice to see. But if Labour keep breaking promises, voters are going to start to look elsewhere to parties offering economic realism. Lowering taxes. People don't want to. People want competence and honesty, especially when their household budgets are under pressure. Credibility gap could easily open up if the government keeps shifting the goalpost.
And one of the tax rises that they're talking about, and possibly one of the most worrying that could rise, is VAT. What impact could a VAT rise have on everyday essentials and the cost of living generally?
Really, really weird one. My fiance, she uses the app Vinted.
Oh, yeah.
And I could not believe it because you don't sell expensive things on Vinted. You pay your tax, your income tax, buy these clothes and then you sell them for half the price. She got to a point where she tried to log into her app at the start of the week, and it's now saying that you've got to fill out this form and complete HMRC regulator, whatever it was, Jake. And I just couldn't believe it. So, a VAT rise hits absolutely everyone, but it hits the lower and middle income families the hardest. Everyday essentials get more expensive. Inflation gets another push upwards. It's a regressive move, but because if it takes proportionally more from those with less. For families already struggling, higher energy and food bills, it's the last thing they need.
Yeah, people are really going to start to feel the pinch, aren't they?
Yeah. It's the same with business, if it's going to affect them massively.
Yeah, that's interesting about the Vinted. I feel like Labour may have seen a little market where people are getting something quite cheap and thought, there's an opportunity there, maybe.
Yeah, well, I don't know if that was an old thing. I don't use it myself, but
me neither.
If it's a new thing that they've done, but I just couldn't believe it. She's made £250 from selling her old clothes on Vinted, which you've already paid the tax on.
Yeah.
And now you want more.
Yeah.
I really don't understand that, but yeah.
So how could rising VAT push small businesses into possible problems and maybe even into closure or insolvency?
Well, the trouble is they already operate on thin margins.
Yeah.
You raise VAT, they either have to absorb the cost or cut into their profits or pass it on to customers, risking lower sales. So many can't afford either. So it adds more red tape and cash flow strain, especially for those trying to stay afloat after COVID, after the pandemic. It was really tough, and now it's just going to force more stress and more struggle onto the everyday business owner, which I think's tough. It's tax on growth, and that's the opposite of what we need, the country needs to stimulate growth.
Precisely. I've said it previously, but if you're making your local coffee shop or your local plumber charge 20% more for their services or 20% more for a cup of coffee, it's like you just said, sales are just going to go down and everyone's just going to start feeling the pinch.
Yeah.
We really need to support small businesses.
100%. Well, even in London, you go to buy a beer, £7-8. It's crazy.
Seven's all right nowadays.
Well, I wouldn't say that. I don't know where you live, Jake. Probably somewhere fancy. But I don't like paying £7 for a pint. But yeah, it is tough. You've seen inflation increase the price of your everyday goods already.
Yeah.
Now, for small business owners to hike the prices up, that's going to be a real tough pull for them.
So if VAT does go up, what can people do to protect their purchasing power?
Well, I think that the main thing is diversifying and, hold assets that aren't tied up to government policy or fiat currency. Obviously, working in gold, I can flick it back to gold.
Sure.
Gold is a VAT-free asset. Physical gold has historically held its value when currencies are under pressure. I think I said the other week on another podcast that if you look back to 2007 to 2008, the last real recession, the pound went down 35%. In that same year, gold went up 43%. So there's an inverse relationship with uncertainty, the pound dropping and gold going up. It's a finite resource and it doesn't rely on government promise, if that makes sense, Jake. So yeah, people are turning to gold because it offers real purchasing power. It protects you against inflation, economic uncertainty, geopolitical tension. So especially, I think it's important in times like this to have something physical that you have control over.
Yeah. And relevant to today's topic, it is VAT free.
Yeah.
Are we seeing increased demand for physical gold ahead of this budget? And if we are, what are the possible reasons for that?
Absolutely. Whenever there's talk of tax rise or fiscal tightening, that demand tends to rise. People get a little bit anxious. As I say, the tax burden's increasing. They, in their head, instantaneously think, right, I've got to do something now. So, yeah, the demand, as I say, the last couple of weeks, especially for us, has been really busy. But people are looking for stability and independence from government decisions that can erode their savings. So they're just looking for safe places to protect and grow their money. And I mean, if you look at premium bonds, for example, very popular maybe 5, 10, 15 years ago. But the average return, the last time I checked on premium bonds, you can just type this into Google, is in or around 3%, barely keeping up with the cost of living. So, if your money and the pound is devaluing and your money in the bank or in premium bonds, for argument's sake, is stagnant, every year goes by, you're essentially losing value, purchasing power.
Yeah.
Not to sit here and say gold's there to make you thousands and thousands. It's there to protect what you do have. You've probably people have worked extremely hard for what they've got today, and they want to make sure that money's working hard for them. So that's when we see people flocking to physical assets. As I say, demand's gone up.
And final one, for someone who's considering gold for the first time, what would you suggest as their first step?
Yeah, sure. Well, I think that the first step is to think of a palatable figure in your head. You know, gold's one of them things. I view it very similar to property in a sense where it's a physical, tangible asset. Over the last 20 years has performed really, really well. So the confidence there in the product itself, but it's a new market to you. The difference between gold and property is if you're buying a property in London, at least need £30,000 to £50,000 for a deposit.
Yeah.
To buy gold, you can start off with £100. So I'd say always start with a palatable figure, get that delivered, see how the process works, and you can always build on that as time goes on. Yeah, and as I say, it's also dealing with a decent company. You know, you want to do your research on who you're doing business with, what sort of affiliates that the company has, and that will make your life a lot easier, getting a good level of service.
So before I let you go, is there anything important or anything you're speaking to clients about that you want the listeners to hear?
Yeah, well, I mean, whilst we're on gold, what I say to everyone is around this time of year normally, because it gets very busy, the markets get a bit choppy. So what I always say is if you're looking to purchase gold, you know, especially before the budget, we normally see a bit of a spike in the price. Also on the lead up to Christmas, you've got, you know, the Chinese New Year, Diwali, and Christmas. That's a time where a lot of people purchase gold. So it's nice to get your foot in the door before the storm comes. It's a little bit like driving a car. You'd put your seatbelt on before you go. So if it is something that people are seriously considering, it'll probably help to, you know, get yourself a foot in the door before things go up.
Yeah, and like you just said, start with a comfortable amount and take it from there.
Yeah, well, that's it. As I say, it's all about comfortability. If you've never bought gold before, you want to make sure that you're receiving the gold, seeing how the market works, you're happy. And then, as I say, I think massive for us at the moment is people coming away from traditional ways of saving. Yeah. As I mentioned, premium bonds, ISAs, savings accounts that are just beating the cost of living. Yeah, then you can start looking at adding your funds into the market and get the ball rolling, build a nice portfolio over time. Great.
Well, James, thanks so much for joining me today. Really appreciate it. Super informative.
Thanks for having me again, Jake.
Appreciate it.
Been good. Cheers, mate.
Thank you. Talk to you soon. Bye-bye. Thanks for listening to this week's episode of the Bullion Advantage. What's clear is this. The direction of travel from government is towards higher taxation, tighter control, and less financial freedom. So the real question becomes, are you prepared? Not just for this budget, but for the next 5 years of uncertainty, inflation risk, and shifting policy. That's exactly why so many people are diversifying into physical gold. It's one of the few assets that sits outside the banking system, cannot be printed, diluted, frozen, or revalued by political decision. If you've been listening and think it might be time to take a closer look at gold, you should get a copy of our guide to tax-free gold absolutely free at guide.directbullion.com. That's guide.directbullion.com. Also, don't forget to hit that subscribe button on YouTube, drop a like as well. If you're listening on Spotify, please remember to follow so you never miss an episode. Next time we'll be unpacking the latest Robbing Rachel report, as well as any other important updates from the next week. But for now, remember to share this with anyone who's on the fence about gold. Comment your questions below and we'll answer in the next episode. Thanks so much for listening to this week's episode of the Bullion Advantage. The purchase of gold does not constitute an investment or offer financial returns. Gold is considered a store of value and not an investment product. Past performance of gold is not indicative of future performance. Prices and values of precious metals can fluctuate and are influenced by various market factors. Direct Bullion does not provide investment or tax advice and recommends that you conduct your own independent research before making any purchasing decisions.